everyone, and welcome back for another deep dive. Today, we are going to be looking at Clearwater Analytics, and specifically, we're going to be taking a look at their recent acquisitions of Beacon and Bistro.
This is interesting.
Yes, you all have sent in a ton of sources and want to know, like, what does this mean, for investors, for the industry as a whole, and really what this means for Clearwater going forward.
Yeah.
So Clearwater Analytics, just as a quick reminder for anyone who maybe needs it, is a company that specializes in investment accounting analytics solutions. They provide really like an organized cloud-based platform for asset managers, insurance companies, corporations to, manage those investment details.
Yeah, they've, traditionally been a company that is focused on public markets and public market investments. So this move into private market intelligence is really significant for them.
Okay, so let's get into these acquisitions. First, we have Beacon. Beacon focuses on risk modeling for alternative assets. Think things like derivatives, private credit, structured products, those investments that fall outside your typical stocks and bonds.
Yeah, and Beacon is not a small player by any means. I mean, they were projected to have an ARR of $44 million by the end of 2024. So,
wow,
they're really a force to be reckoned with.
Yeah. And Clearwater paid $560 million for them using a combination of cash and Clearwater stock. Now, the second acquisition, Bistro. Bistro was Blackstone's proprietary portfolio visualization software. And this was designed specifically for their credit and insurance operations.
Yeah, and Blackstone is, a huge name in finance. And so, for Clearwater to acquire a tool that was developed and used internally by Blackstone, it lends a lot of credibility to their offerings.
Yeah, absolutely. It's like getting, a stamp of approval from one of the giants in the industry.
Sure.
The price tag for Bistro, $125 million. Again, using a mix of cash and Clearwater stock. So why is this a big deal? Why are these acquisitions making waves?
So there's a big shift happening, right? Alternative assets are becoming a much bigger part of the pie for investors who want a diversified portfolio. You're seeing this shift towards alternative assets because, look at what bonds are yielding right now.
Right.
It's very low. And so investors are looking for other places to generate yield, to generate returns. And that's where these alternative assets come in.
Yeah.
And both Beacon and Bistro significantly boost Clearwater's ability to analyze and manage these increasingly popular assets.
Yeah. So I'm curious, how will this change the game for Clearwater? Will they become this one-stop shop for investment management?
Well, I think let's start with Beacon. Beacon's infrastructure strengthens Clearwater's existing SaaS model, right? So their software is delivered over the internet, which makes it easier for clients to access and scale their usage. And so with Beacon, Clearwater is able to offer a more robust platform. And then you bring in Bistro. Bistro adds these sophisticated portfolio visualization tools, which means that they can help clients see and understand their investments in a more intuitive way.
Got it.
And this is particularly valuable for large institutional investors who are dealing with incredibly complex portfolios.
So it seems like they're really aiming to offer a much more comprehensive set of tools for both, individual and institutional investors who are, increasingly looking towards these alternative assets. But these deals, they come with a pretty hefty price tag.
For sure.
So how are they financing all of this?
So they secured an $800 million term loan,
okay,
which is a significant amount of debt. They're also dipping into their cash reserves, and they're going to be using a portion of their $200 million revolving credit line.
Right. And we also can't forget that a portion of these acquisitions were paid for using Clearwater stock.
Yes.
Which is a sign that, they believe their company is going to grow.
Absolutely. Using stock as currency shows that they have confidence in their ability to generate future returns.
Okay. So for potential investors out there, what does all this mean for, someone who might be considering buying Clearwater stock?
Well, the market seemed to react favorably. Their stock price went up almost 5% in pre-market trading following the announcement of the acquisitions.
That's a good sign.
It is.
And they are projecting 19 to 20% revenue growth in 2025. They have a net revenue retention rate of 116%, which shows they're keeping their clients happy.
They're very good at retaining their clients.
But, taking on this much debt, integrating two new companies, it's not without risks, right?
Of course not. Nothing is ever without risk, especially in the world of finance.
So let's get into those risks next. Let's talk about, what these acquisitions could mean for Clearwater's future. But first, we need to take a quick break. We'll be right back.
I think we're at this really interesting intersection right now, where you have alternative assets that are gaining traction, with investors who are looking to diversify and maybe, earn higher returns in a world where traditional investments aren't delivering as much.
Yeah.
But these alternative assets are complex. They require a lot of, specialized knowledge to evaluate properly.
Right.
And that's where, Clearwater with Beacon's risk modeling and Bistro's portfolio visualization tool,
Right.
they're positioning themselves, to really be a leader in understanding these investments.
Yeah, it's interesting. Like, could this make alternative assets more accessible to everyday investors, do you think?
Potentially. By providing these sophisticated tools and insights, Clearwater could help democratize access to alternative assets and make them less exclusive to large institutions or high net worth individuals.
Okay.
And this could, potentially open up new opportunities for individuals or smaller firms who might have felt excluded.
Right, right. Because it's always felt like, these alternative investments were kind of like shrouded in mystery, like only for the select few. More transparency would be a welcome change.
I agree. And transparency is a big part of this. With better tools for risk assessment and portfolio analysis, investors can make more informed decisions.
Right.
And this could lead to a more efficient and stable market, which benefits everyone.
But there are, of course, challenges, right? Like integrating these platforms.
Some huge challenges.
Yeah.
I mean, first of all, Clearwater has to make sure that all this new functionality, it works with their existing systems.
Right.
Any hiccups in that process could really disrupt their operations, make it harder for them to hit those growth projections.
Right. It's kind of like, renovating a house. You can have the best blueprints and contractors, but if the pieces don't fit together, you're going to have problems.
Yeah, exactly.
And, taking on that much debt, that's a big gamble, right?
It is. It always introduces an element of financial risk.
What if the growth projections don't pan out?
Well, yeah, if revenue slows down, falls short of expectations, servicing that debt could become a big burden.
Yeah.
And so they have to balance, their desire for growth with this need to manage their debt responsibly.
And how do you think other fintech players are going to react to all this?
That's the million-dollar question. We could see other acquisitions. We could see increased investment in R&D as other fintech players look to create even more advanced solutions.
Right, yeah.
The competition is fierce, and everyone wants to be the leader.
It's like this high-stakes game of chess.
It is.
With Clearwater making, like, a really bold move.
Yeah, the stakes are high. The winners of this game are really going to shape the future of finance.
So what's the takeaway for investors like you and me who are just trying to, keep up with everything that's happening?
I think staying informed and adapting to these technological advancements is more important than ever. The financial landscape is changing so rapidly.
Right.
And, the old ways of doing things just aren't going to cut it anymore.
We've talked about kind of the big picture, the industry-wide implications, but what about Clearwater internally?
Yeah.
How might these acquisitions affect their dynamics and culture?
That's important too, integrating two new companies, each with their own culture and way of doing things.
Right.
It can be messy. It's like, it's like trying to blend two families together.
Yeah.
There's going to be friction. There's going to be adjustments as people get to know each other.
And there's also going to be, just the financial pressure of taking on so much debt.
Yeah.
Could that, affect their decision-making going forward?
Absolutely. Debt can be a double-edged sword, right? It can be a powerful tool for growth.
Right.
But it can also lead to bad decisions if you feel pressured to pay it back too quickly.
So what are some things that, people listening should watch for as this story, continues to unfold?
I think it's going to be important to keep an eye on Clearwater's financial performance in the coming quarters.
Yeah.
How quickly can they integrate these new operations? Can they hit those revenue targets? How are they managing that debt? These are all key things to watch.
It sounds like there's a lot at stake.
There is.
Not just for Clearwater.
For the whole industry. What Clearwater is doing reflects a much larger trend in finance.
Right.
It's all about technology. It's all about innovation. It's all about disruption.
So this is just the beginning.
Oh, this is just the beginning. In the final part of our deep dive, we're going to really bring it all together and explore some bigger questions about the future of Clearwater and fintech.
Sounds good. We'll be right back. All right, so we're back. We've spent this whole episode really breaking down Clearwater Analytics and this this big move they're making into private market intelligence with these acquisitions of Beacon and Bistro. We've looked at the details. We've talked about like the wider impact on the industry, and we've even looked at some of the potential risks that Clearwater might face going forward. So
Sure.
I think now it's time to kind of bring it all together and maybe highlight some key takeaways for everyone listening.
I think one of the biggest takeaways here is that, Clearwater's not messing around.
Right.
They're not just dipping a toe in the water here. They're going all in on private market intelligence. They really want to be a major player in this space.
Yeah, I mean they're backing that up with some serious cash, right? With those price tags. And it really seems like they're betting big on this whole like move towards alternative assets.
Absolutely. And this shift towards, cloud-based investment analytics. The SaaS model.
Right. Right. And they're not exactly starting from scratch either.
No, not at all.
I mean, they already had strong recurring revenue, a growing customer base. It seems like they're just adding fuel to the fire, so to speak.
Exactly. It's like they're amplifying their existing strengths and reaching into new, potentially lucrative markets at the same time.
Okay, so they're being ambitious, but we did talk about some risks earlier.
Oh, yeah, for sure.
And one of the big ones that we mentioned was integration, right? They need to smoothly blend all these new platforms and teams into their existing structure.
That's right. It's not easy to bring, two different company cultures together, get everyone on the same page.
Right. I mean, if things don't go smoothly, it could really disrupt their operations, alienate customers,
For sure. A smooth integration that's going to be critical for their success.
Yeah. And of course, there's the financial risk.
Yes.
They took on a lot of debt to finance these deals.
That's right.
And it's going to be interesting to see how they manage that.
A delicate balancing act.
Yeah. They got to stay focused on innovation and growth, but they also have to be mindful of their debt obligations.
For sure.
So shifting gears a bit, what does this all mean for individual investors? Like what should people be paying attention to?
Well, I think one thing that really stands out here is just the sheer pace of innovation in the financial technology sector. Things are changing so fast, and you really have to stay informed to make good decisions.
Yeah, absolutely. It's a lot to keep up with sometimes.
It is. But I mean, knowledge is power, right?
Right.
Especially in a dynamic environment like this.
I think these acquisitions also really underline like the growing importance of alternative assets in a well-rounded portfolio.
Absolutely.
As more investors are looking for higher returns, for ways to manage risk, in a world where traditional investments aren't yielding as much, these alternative assets become really attractive.
Okay.
But for so long, it felt like those opportunities were only like available to big institutions, to the ultra wealthy.
Right.
And I wonder if, what Clearwater's doing, this push into private market intelligence, could that open doors for smaller investors?
It's certainly possible. It's still early to say for sure. I mean, only time will tell, right?
Right.
But it's definitely a trend worth watching.
Yeah. I mean, we've covered a lot of ground today.
We have.
But I think, the bottom line is that Clearwater's making waves, they're shaking things up. These acquisitions are bold moves. They show a lot of ambition. And whether they succeed or stumble, it's a story that's worth following.
Absolutely. And as always, we encourage you to keep exploring these ideas, keep forming your own conclusions.
Yeah.
Keep learning, keep questioning.
Right.
And keep diving deeper into this fascinating world of finance and technology.
Thanks for joining us for this deep dive.
Thanks, everyone.
And until next time.